if they cannot stop the loss of confidence, they're going to get wrecked on all their positions because they've got like in summer 2020, they've got their liquidity sprinkled all across DeFi, all across all these different chains. And when people start to panic and run for the exits, well, that's when the really hits the fan, and they're going to lose a lot of money in all these coins they have. So UST right now grew to $18 billion, and that's 18 billion incentivized like dollars. That's not 18 billion. Oh, well, like I love the idea of having an algorithmic stable coin, so I'm going to use it for regular normal things. That's $18 billion of like, I'm going to get 20% on Anchor, and then I'm going to loop it to Abracadabra and make it 40% on that. And then I'm going to, why not? I'm going to loop it again over to Anchor and back to Abracadabra on Ethereum and back. And now I'm at 100% APY. Well, of course it's going to grow so fast because you've got the market makers like Alameda and Jump and all these guys basically like saying, well, we're doing it, we're sanctioning this. There's tons of liquidity, everybody's making money, it's drawing in all these people. Well, the bear market's here. Back in January, this like there was another Ponzi-esque thing called Ohm, which grew massive in Ethereum, and then a bunch, like 20 of them started all over the different blockchains. They forked this Ohm model, which was like where we saw people getting like 80,000% APY. It was insane. But that was when that collapsed in January. That's why I started writing about UST and saying like this stuff is so exposed. Like everybody's exposed to each other in all these pools that they're all using to get fungibility between the stable coins. So when Ohm and Wonderland and Redacted and like Mark Cuban's Ponzi, KlimaDAO, the green DeFi coin, when all that stuff blew up, it nearly took down UST in January. So what happened was like the funds, when you've got like a three pool in Curve, say, of 1/3 USDC, 1/3 Magic Internet money, 1/3 UST, right? Say $1 billion of liquidity for these funds to be able to like make big transactions without any slippage. You've got that happening, and somebody starts to lose trust in the UST peg. Well, what they did was they pulled out all the other assets from that three pool. So now it's like 80% UST, 10% MIM, 10% USDC. Like you see how that could be a problem because you're left holding the bag as somebody that's a liquidity provider in that kind of a complex thing. If you're the last person to pull out the real dollars, or the thing that's most likely to be the real dollars at the end of it, you're going to be left holding the bag when the thing depegs. So there's three doors to exit. Now we see how it grew so big, right? It grew so big because the funds, like Mike Novogratz getting tattoos and shilling it to all these high net worth individuals, FTX, Jump Capital, Andreessen Horowitz, all these major tier one crypto funds all supporting this stuff, putting their liquidity there, pumping this shit, normalizing the yield farm Ponzi scheme mechanics. It grew big, right? $18 billion just UST. Abracadabra was the fastest growing algorithmic stablecoin, even more. So like MIM was massive. So now you got this thing where it's basically like what happened in the 1920s at the turn of the century stock market when JP Morgan, like the actual guy, JP Morgan, when the stock market would start to collapse and people would start doing the run on the bank, he would go and he would give money to the banks, and he would say like, just let's stop this loss of confidence. Here's a bunch of money. Let's make it happen. Let's finance these transactions. Let's stop the crash. And he would be acting like how Jump Capital and FTX are acting like today. Like they're acting like the JP Morgan Wildcat bankers of the 1920s in the 2020s because they're making so much money that they have to stop the loss of confidence because it's going to cascade and just wreck the whole system. Then you have like a great DeFi depression because there's no central bank to bail out DeFi. In the 1920s, like after that shit kept happening, they figured we gotta like create the central bank that can stop loss of confidence. And in 1998, LTCM blew up, which was long-term capital management. Long-term capital management. James Rickards writes about this in a couple of his books. I think Road to Ruin and Currency Wars. He talks about how he used to work for LTCM. I think it was their general counsel. And LTCM was very close to taking down the entire financial system. He was like having conversations with the Federal Reserve and all the big globally systemic important banks that night, because when Russia defaulted on their debt in 1998, which is the equivalent of the USDT in this scenario, UST, sorry, the Tether US stablecoin, UST is like the equivalent of a sovereign that defaults. Because if you have Russian bonds in 1998 and you're trading on those Russian bonds, like LTCM was, they were doing high leverage, statistical arbitrage, algorithmic trading on betting that the drop in price of Russian bonds would go back to peg, would go back to the price of the long-term bonds. Like when the short-term bonds start to drop in price, well, they start leveraging up and buying it, and they assume that they assume it's not going to blow up. It's that the Russia's not going to default on their debt. They assume it's going to go back to quote unquote a dollar, like whatever the long-term bonds are issued at. And they were over leveraged and betting on this trade and were making tons of money, just like the crypto trading guys are today. They're making shitloads of money. They were the smartest people in the room. There's a book about that.
So it's an old scam.
Yeah, it's an old scam. The book is called When Genius Fails. You should read it. It's a great listen, a great read. But this is not like different. It's actually what these guys are doing is they're behaving like Wall Street. They're rebuilding everything that's wrong with Wall Street on blockchains and then selling it to us as if it's a Web3 revolution for the people. But really, it's just they're becoming the rich insider elites, and they're doing all the nonsense, degenerate stuff that the Wall Street guys did, and they're trying to become too big to fail. But in this case, Russia is equivalent to UST. Like losing the peg, the UST losing its peg is the equivalent of Russian bonds starting to go down in value, the short-term bonds versus the long-term bonds. If Russia completely defaults on their debt, well, the debt is wrecked, and the people that were betting it's going to go back to par are just destroyed. That's what happened with LTCM. They lost they basically went bankrupt and had to shut down, and they almost took down the rest of the banking system because the big banks were exposed to LTCM. They had loans to LTCM. Like they were all exposed to LTCM. They weren't buying the Russian bonds and doing the trading on the Russian bonds, but they were exposed to the Russian default through LTCM. That's the exact same as what's happening here in DeFi. People have got exposure to like magic internet money, DAI, all these crypto trading funds. Like everything is all interwoven, and everybody's like there's direct pools where okay, so like the three ways that you can exit, this is why the peg is being lost right now. Or at least yesterday it was like severely getting wrecked. There's only three ways to exit that if you're this person that was one of the people that got into this Anchor Ponzi scheme to get the 20% APY, but now you're like, shit, I need to get out of this thing. There's only three doors to exit from. It's like having 18 billion people in a movie theater and there's three like doors to get out. As sooner or later, it's going to cause a stampede, and people are just going to start like smashing walls open and try to get out. Like the orderly lines to get out of the building quickly, it turns into a stampede. The first door to get out is the algorithm. You want to use the algorithm to orderly get out of UST and be like, I think I'm finished with my Ponzi today. I'm going to wait in line and exit at par. I'm going to wait my turn. I'm going to be nice, and I'm just going to go over and trade some NFTs on OpenSea while I wait my turn to exit. That's the way that they expect this to play out. If you want to actually get out through the door that's like they designed for people to exit, you got to take your turn. You got to wait because there's only like, I think it was like, don't quote me on this, but there's something like $100 million of exit liquidity algorithmically to get out. And how you get out is you give some UST and then you get back Luna coins. The ones that were burnt, quote unquote, burnt initially to like mint the USTs. When you give them back, you get back Lunas. So the market cap of Luna needs to be like higher than the market cap of UST in order for you to have the confidence that there's enough value locked in this Terra Luna blockchain to be able to support the price of UST or support the exit of UST if people want to exit. Well, what happens when the peg starts to drop because people panic, they don't want to wait their turn, they want to get out, and they're willing to take slippage, the price starts to drop of UST and Luna because people that are exiting, they didn't want Luna in the first place. The only utility for Luna is to do the anchor Ponzi scheme and to get UST. They want to go back to Bitcoin or back to ETH or whatever they want, UST, whatever it is, USDT. So when people want to exit the farm and stop the degen box looping stuff and kind of like unwind all the crap they've been doing, because the bear market's clearly here for crypto, like there's it's clearly not up only mode, so people are starting to exit stuff and try to unwind their trades. If it's not done in an orderly fashion, well then they go to the second door because there's not enough liquidity for you to get out. You don't want to wait in line and be the last person to get out and end up getting like 60 cents on the dollar because Terra Luna prices crashing. So by the time you get your turn to get out, the Luna price is going to be like way below your cost. So, you make these calculations that, okay, I'm willing to take 10% slippage to just get my $1 million out of this thing and eat the $100,000. Then you go to the second door. The second door is the DeFi complex of fungibility between the pools, like USDT, MIM, UST, the thing where it's meant to be just a way for traders to market make and be able to swap between different stable coins. It's a way to create liquidity and fungibility between all the different stable coins. There's a whole bunch of these things across Ethereum and Solana and Avalanche and all these chains where you pool your stable coins. There's tons of different stable coins now. Well, that's the second door. That's outside of the original design of Terra Luna. That's the DeFi complex creating a solution. There's only enough liquidity in there for like a couple of whales to get out. There's not $18 billion of liquidity in those vaults, those gauges or whatever. So the smartest people who are thinking ahead of the risk of depegging and the risk that the music has stopped with this anchor protocol, the smartest people in the room are going to be the first to take out the real assets, the other assets from these pools. And they're going to eat a little bit of slippage, but they're going to be getting back. They're going to be basically swapping their UST for DAI or Magic Internet Money or USDT or whatever is pooled up with UST because everything equals $1. And then it's the amount of UST inside of those things is going to grow and grow and grow. So before you know it, that's just going to be a big giant pool of UST only. And as the price of UST starts to drop, as people are willing to take more slippage because they're not waiting in line for the protocol to let them out, and they're no longer waiting in line for the curve vault to let them out or whatever, then that starts to drop too, and it starts to spill over to Magic Internet Money and USDT, and these other stable coins. It can spill over and cause problems with the other algorithmic stable coins. But then the third exit door is the one that most people use. This is because most market participants are not sophisticated, and they panic, and it's driven by fear and greed. The third exit door is the big door that's just like full of razors and like spraying acid on you as you're trying to leave, but you just don't give a shit. You just need to get out because you don't want to be left holding the bag. And that's the Uniswap and Binance and all the exchanges that have pairs of UST to whatever, UST to USDT, UST to Bitcoin, UST to ETH, whatever it is. All the exchanges are the big door that like most people panic out of because there's not enough room to get out of the other two doors. And this is what happens when the panic turns into like a depegging, systemic cascading risk. Well, that's when people start to just sell at any price. That's why it went down to like 60 cents or something yesterday. When Mt. Gox went under in 2000, like late 2013 or early 2014, I forget exactly the date. This was happening with Mt. Gox because now all of a sudden you've got a stable coin or a Bitcoin outside of Mt. Gox, which is worth one Bitcoin, and a Bitcoin that's a database coin on Mt. Gox. And somebody created this thing called Bitcoin Builder, which allowed you to take a bet that Mt. Gox was actually solvent and everybody was just panicking and there was too much fear in the markets. And people would this was kind of like a DeFi thing. It's kind of like USC and Anchor and stuff. Like when Mt. Gox was going insolvent before they actually shut down, there was a couple of weeks there where people who had like a lot of Bitcoin on their Mt. Gox account were going on this website, Bitcoin Builder, and allowing you to trade your database coins for real Bitcoins. So a bunch of people took the bet that I'm going to buy, like, I'm going to give you 100 Bitcoin for 200 Mt. Gox Bitcoins because I believe it's just not really insolvent. It's going to go back to a dollar. And then I just made a ton of Bitcoin. So that's what a ton of people did. They were speculating that the peg was going to go back up, like that one Bitcoin was going to equal one Bitcoin on Mt. Gox. And that was wrong. Like, to make that choice, you basically have been in bankruptcy proceedings for the last 8 years. So the risk,
And they're about to be released.
we'll see. I mean, I don't have
Uh,
any hope that it's going to be released anytime soon. It's been like proceeding
weren't they
after
saying
proceeding.
quarter
I
two?
know, but
Do they
it,
keep delaying
it's
it or
been
what?
delayed for 8 years. I mean, they keep delaying it, delaying it, delaying it. I wouldn't be surprised if it's another year. But the
Yeah.
thing,
So
the
go
the
ahead.
thing that they tried to do with Bitcoin, like this is the reason, like back in January, that it almost blew up, and they had to get Jump Capital and Alameda and these other funds to come in and basically provide confidence to the market. This is exactly what the Federal Reserve does with bailing out the repo markets or doing quantitative easing. It's to provide, like, when the US Treasury, it's funny that they're both UST, like the US Treasury is also pegged as UST. When the US Treasury, when the liquidity starts to dry up for the US Treasury, that's a systemic event in the traditional markets. That just means that banks no longer trust it, they don't trust each other to be able to make good on their loans because of what happened with LTCM, what happened in 2008. When trust starts to erode in the base collateral of the system, they stop trading to each other because they want to keep what they have and they don't want to be exposed to somebody else's toxic, over leveraged, synthetic derivative bullshit collateral and balance sheet. So they stop trading with each other, and the Fed has to come in and provide liquidity and do quantitative easing and basically pay everybody to start buying the U.S. Treasuries and just keep the grease going, keep the system going. Otherwise, it locks up. When the liquidity dries up, the stock market crashes, confidence gets lost in the real estate market, the bond market starts to go crazy. The problem with DeFi is they have no central bank. There's no central bank of DeFi to bail it out. So they're just gonna. This is the free market. Like the traditional financial system is corrupt. The signal is corrupt because you have the Federal Reserve stepping in to provide liquidity and socialize the losses and, like, finance the printing of tons of new treasuries to keep the trust going in the system so that it doesn't we don't have another Great Depression. There's nobody to stop that in DeFi. Like when trust gets eroded in UST and then people just exit that, if they tried to do it with Bitcoin. That Bitcoin was a confidence game when they tried to say they were going to buy $10 billion of Bitcoin, and that's what was going to back UST. So that, like, don't worry, you don't have to have a run on the bank. It's basically when Neil Cash Cow goes on CNBC and he's like, we have enough infinite cash in the system. You don't have to worry. But the Federal Reserve has enough money to handle whatever. You don't have to worry about anything. Don't take your money out of the banks. Don't take your money out of the banks. We got enough. That's what Do Kwon was doing with quantitative easing. He was trying to, like, signal to everybody that we're using Bitcoin to back UST. It's the biggest, deepest liquidity pool. Don't worry, you'll be able to get out. We'll have $10 billion for anybody that wants to get out. Well, that doesn't work when people actually start to lose and they actually start to panic and people run for the exits. So it failed the test of what they tried to do with Bitcoin. So I expect that they're probably just going to abandon the Bitcoin, like, narrative. Maybe they won't. Maybe they'll keep it, but it didn't work. And they're going to need to, like, defend this peg at all costs. I don't know where it is today. I think it came back up, but
Right.
they need to defend this peg at all costs because if Terra Luna fails completely, which I think it's going to, it's going to spill over to every other over leveraged synthetic DeFi thing. It's going to, all the other algorithmic stablecoins are now at risk because you realize, oh, if this can fail, so can Magic Internet Money, so can MakerDAI.
It's all just going to
It
unwind,
can't unwind. That's the thing.
like
Like,
all of the.
there's not enough real value backing this stuff to unwind. It's just going to blow up. Like, it's a gigantic Ponzi scheme that is supported by people like Mike Novogratz and Andreessen Horowitz. So they've got like all these very respectable VCs have hundreds of billions of dollars that they've poured into this Ponzi scheme to make it look like it's safe and it's the DeFi, it's the new financial system, but it's all built on perverse incentives and incentivized token gambling nonsense. So when the bear market comes, which it's clearly here, people start to think like, wait a second, is it worth the risk to have 8% APY if I could potentially lose everything, or if the token that I'm getting paid in gets destroyed and I'm actually going to lose money? People start making those calculations. It's the same as in 2018 when the ICO bubble started to crash. It was like a game of chicken. All these treasuries were full of ETH. Like they had raised tons of ETH and they were all playing chicken with each other. It's like prisoner's dilemma. Like, I won't sell if you don't sell. And now they got their pre-mine plus the ETH. And like, that's why ETH got destroyed from like $1,400 to $80 or whatever in the bear market. Because all these treasuries were playing this game of chicken where they were like, oh, well, I won't sell if you don't sell. And then the price goes down, they start selling, and then they all want to, and then it's a competition of who can get out first. And after when we get to that point where it's a competition of who can get out first, because you're desperate for liquidity and you're trying to pull your liquidity out so nobody sells to you, and you're trying to sell your shit coins so that you can get back to Bitcoin or dollars, then it's game over. I mean, it's just chaos. And I think that's where, well, I don't know for sure that's where we are right now, because they may be able to like raise $10 billion between all these crypto funds. They desperately have to defend these
Mm-hmm.
pegs, and they may be able to do it. I don't think that they'll succeed. I think there's a lot of risk in all of DeFi right now. Anybody that's in any of these lending things that have tokens like crypto.com and whatever, like any of these lending things that all pay you in tokens, anybody that's got anything in this nonsense, I think it's gonna blow up. So I'm just urging caution.
All that, yeah, it's all that like rehypothecated leverage over and over again. Wow, dude, bless you, Brad, for going through and researching all of that. That's incredible. That's a deep
Well,
rabbit hole.
hopefully I got everything right there. I haven't paid a lot of attention to it in the last couple of months. I wrote that article I wrote that in January after like I was watching what was going on with the own Ponzi's blowing up and stuff, and I was like, this is so exposed. Like, I was learning more about how the financial system worked, and I went back and started to read about what happened in the traditional markets during LTCM and during 2008 and COVID 2020 events. And to me, it felt like exactly the same. It felt like the exact same thing is happening, except to give DeFi credit, it's at least transparent. You can at least see what's going on. With the traditional financial system, it's all done behind closed doors with a bunch of boomers making decisions in secret. You can't see, you don't know what the supply of US treasuries really is. You don't know what the supply of dollars really is. You don't know what the balance sheets of the banks look like. Everything's opaque in traditional finance. So to give them some credit, at least they've rebuilt everything that's wrong with Wall Street on a blockchain, but they've made it transparent so we can see what's going on and assess the risks properly.
So what is Bitcoin? How does Bitcoin play a role in all of this? Like being the most stable,
Well,
does it play any
I
role?
think it's just short-term pain, long-term gain, because just like the Plus token Ponzi in 2019 had pumped Bitcoin to like $13,000 in summer 2019, because we were just like, yeah, the bull market's starting early, I guess. Woo, let's go. Well, that happened for like a month because the Plus token had like milked billions of dollars from people in Asia and pumped Bitcoin because they're buying Bitcoin, and then they started selling it all, and Bitcoin price crashed because the Plus token Ponzi unwound, and then eventually the authorities seized like half the Bitcoin or whatever. They didn't sell the rest of it, and the selling subsided. But I think the reason why we kind of had that temporary run up before Bitcoin 2022 was because Do Kwon started signaling that they were going to start buying $10 billion of Bitcoin, and then got everybody exuberant for a little bit, and they was like, yeah, the Ponzi's back on in DeFi. Well, I guess I'll buy some Bitcoin too because Terra's going to buy Bitcoin. I think that was just a short term corruption in the market by this Ponzi mechanic, and I think we went down yesterday, partly obviously because macro conditions are insane, but also because there's excess sell pressure from the LFG trying to defend the UST peg by using their Bitcoin to try to buy up UST and keep UST from completely cratering and collapsing altogether. So there was extra sell pressure from that, but this just like the Ponzi token plus token was once they got flushed out. I mean, sure they prematurely pumped and then dumped us, but it's just a short term thing. Like there's always going to be Ponzi schemes. There's always been Ponzi schemes and problems in Bitcoin, but long term it doesn't affect Bitcoin. Like this is just it's just a short term thing that we have to suffer through. But
Right.
I bought the dip yesterday, and I'm gonna buy all the way down if it goes down any further. Like I'm it doesn't change my fundamental thesis on Bitcoin medium or long term. I'm preparing mentally for 20,000 because I'm thinking about Bitcoin in long term time frames. I'm preparing for $1 million Bitcoin in by 2030. So like, what does it matter if this Ponzi scheme blows up and DeFi blows up and takes Bitcoin down to 20K? I'm just going to buy more of it because Bitcoin's the only thing that actually makes sense here. And Lightning Network is still growing. The shrimp are buying the dip. Like the amount of small wallets that keep, like, we want Bitcoin to be like 50% of people have Bitcoin. There's only a couple percent of people that have Bitcoin now. So it's it's good
Right.
for me when I see that the number of wallets of small holders is growing during price drops. That gives me faith that this is what Bitcoin's for. Sure, some billionaires are going to be selling some Bitcoin because they're going to be kind of afraid of seeing their net worth drop another 50% or something like that. But every time the price drops, I look at it like the shuttle is making one more stop to let more people on the shuttle, and it's going to take them because we're going to the lifeboat, and we need more people on the lifeboat. Like we're going to Satoshi's Ark. So price drops, I look at it like, yeah, it sucks to see my net worth collapse like that, but what are we in this for? I mean, yes, to make some money, but protect ourselves from inflation, but also to help other people. So I like seeing price go down. I mean, it kind of sucks, but
Yeah,
as long as the
absolutely.
trend is still going in the right direction, I'm super bullish on Bitcoin long term.